by buying ETFs. Right now, it's extremely easy. And then when they see that Bitcoin is returning 40% every year on average, they will really start learning more and hopefully understand that it's better to have real Bitcoin instead of buying ETF. But I think this is a natural process how everything will evolve. But going back to the gold versus Bitcoin topic, I think at some point the Bitcoin versus gold will evolve into like how I can transact, because we're talking a lot about the digital gold, Bitcoin being digital gold, but Bitcoin is much more than this, and Bitcoin is essentially allowing you to move funds internationally, which gold right now is not. And for everyone watching this and listening, you may think that, but wait, I can have 2 clicks and then buy gold. You're actually buying CFD. You're not buying real gold. You're buying a contract for difference. And in best case scenario, you're buying something digital which you cannot see and you cannot verify because it's not a blockchain. That's the extreme difference between Bitcoin and gold. You buy Bitcoin, you verify on blockchain, you know you're owning this because there are hundreds of thousands of miners saying, yes, this is a real Bitcoin and this Bitcoin belongs to you. Versus on gold, this is not the case, unless you physically own it and you physically bring it to your home. And then when people understand that, okay, it's a digital gold, it's increasing in value, is protecting me from inflation, but I can use it for transactions. I can send money to my daughter studying in United States with literally like 2 clicks, 24/7, without anyone asking any questions. And that's the hard money. That's where we start the discussion. That's the ultimate hard money. You can protect your wealth, you can grow it, but also you can use it for transactions. So yeah, that's what I think people will realize
Yeah.
sooner than later.
Yeah, Bitcoin is way better when it comes to, borderless movements and all this aspect of transferability and sending offshore and moving physically between jurisdictions. Because if you try to do this with gold, it's going to be very problematic in most cases. And in some cases, you may even get into trouble if you have more gold that you try to ship over the border, or either you would pack it in your car and you try to take gold bars with you, or good luck going through the airport gates with gold bars. Whereas in Bitcoin, it's not only easier to move money around the globe, but it's crazy how much options you have, because you can use the brain wallet. You can literally memorize 12 English words and take all your possessions with you like this without having any physical thing to carry whatsoever. So this is unlike anything we've seen before. I mean, that simply didn't exist before. And so if you are in Colombia or in Venezuela or in Ukraine or in Iran or in some other places where you need to move your wealth and move it outside the country, Bitcoin is your life-saving technology, because you cannot do it with gold. And you cannot do it with real estate. Obviously, we cannot do it with anything else. Bitcoin is actually solving this. And as more and more, problems around the world will surface around geopolitics and what have you, and, destabilization of some countries and some governments cracking down and, imposing capital controls, as all those problems become more relevant in 21st century, Bitcoin will be lifesaver for many people, because that's the only thing that you can take seamlessly and easy and can save your wealth.
Yeah, totally agree. See, one point which we didn't touch on this discussion is about the volatility. Now, everyone listening this will argue, okay, great, it's protecting my wealth, but wait, like Bitcoin can go up and down like 60-70% for a period of a few years, and then gold is super stable. I think it even went from 2,000 to 3,000 for a period of 10 years, something like this. So when you buy gold, you don't have significant volatility. The price is there, and it's on average it's increasing with a few percent per year. So if you want to just hedge against inflation, gold is there. It's the price will be, you know, the price will be stable, because what can go wrong with gold? And then you have Bitcoin on the other hand side, where you can park your wealth. You are making 40% on average every year for the past 10 years, but you know that the price of Bitcoin can drop from 69,000 to 16 for a period of 2 years. And this drawdown, like of 60%, can be quite challenging. And this is what right now people are using as an argument, saying, okay, yeah, but Bitcoin is too volatile. How I can trust my wealth to be so volatile? I don't want to wake up tomorrow and my wealth to be down 50%. Yeah, what do you think on this one? I can share my opinion, but I'm very curious to hear what you think on this point.
Yeah, so my view is that Bitcoin volatility is vitality, obviously, for any new technology that's just getting adopted and at pace that we are seeing with Bitcoin. This is expected. This is expected because if you look 15, 16 years ago, we had nothing. So this is the asset class that was born and came from, you know, nothing. We didn't have it before. Whereas gold is a very old technology, very established technology. Everybody knows gold. You know, every country stores gold, etc. The history of gold is as old as civilization and humanity itself, right? So in that respect, you know, you're comparing some new revolutionary technological breakthrough with old established entrenched technology that was with us forever. So I would expect to have some more volatility on the side of a new breakthrough technology. Now, having said that, this volatility is only bothering you when you're thinking very short term, when you're thinking day to day, week to week, month to month. But if you zoom out and you start thinking in 4-year cycles, or beyond that, if you start thinking in 5-year, 10-year periods, then, you know, even those people that bought Bitcoin at 69 back then in the last cycle, and then rode it all the way down to 16K, if they only held to it, they not only recovered, but they made money on this. So, and they are up right now at, you know, 110, right? So the thing is, the problem with volatility is just the problem of your resolution of your how much of your time period that you're looking at. So yes, the short-term volatility is there. That's why you should never try to trade in and out. You should never think about investing and buying Bitcoin in a period that is shorter than 4 years. But you are thinking in the more than 4 years, you know, everyone who bought Bitcoin and kept it, held it for at least 4 years or more, didn't lose money, is up on their investment. So while this is not obviously a guarantee or a financial advice, this is something historically that we have seen, and it always held. So just summing up, I think that volatility is expected because of revolutionary technology that we have, and we just need to zoom out and lower our time preference and think about, you know, 4 years, 5 years, decades, because that's also another aspect that hard money makes you think more and more about the future, because all of a sudden you start planning more. You're thinking, you know, you're trying to plan for long term. You're thinking about 5 years, you think about decades, you start planning strategically. Whereas if you're constantly on the hamster wheel of fiat money, it's constantly losing value, try to spend it as soon as possible because it's losing value. Next year it'll be less valuable. Your money is constantly going down and being debased. And it's very hard to start thinking in 5-year periods, you know, 10-year periods, decades, etc. So that's yet another underappreciated aspect of hard money and thinking about hard money, because you lower your preference and you start zooming out, which really helps you in the longer term.
Let me give you another example on what you just said. Now, imagine you are buying stock of a relatively small company, let's say 10, 15, $20 billion company. If this company launch a new killing product tomorrow, or they have a extremely good financial report, the price of this stock can skyrocket with 10, 20, 30%. And if something goes tomorrow, for example, let's say let's say Google is suing this very small company because they did something wrong, the stock can crash 50% literally overnight. But once the company become established and increase its market cap, you should not expect to have significant price changes of the stock. Like, see what's happening right now with Google, with Apple, with Nvidia. Like the stock is not moving more than 5-6% per day, and even 5% is considered crazy, crazy volatility. And this is happening right now with Bitcoin, because Bitcoin was established 16 years ago. At the beginning you have some crazy swings, ups and downs. But now, if you see in the past 4 years, actually, you don't have days where the price is up 10% or the price is down 10%. No, actually, the volatility is going down. It's getting lower because the market price is just too high right now. The market cap is too high. And you should not expect the Bitcoin to drop 10% tomorrow. Or if this happens, it's going to be an outlier. It's going to be a one-off event. So I think that's what's happening right now with the Bitcoin. The volatility is going down, and it's going to go even lower. And this will be the argument against those saying the volatility is too high. It used to be too high. Now it's not. It's not, because Bitcoin is much more established, compared to where we were 6-7 years ago. So yeah, I think that's where we are heading towards right now.
Yes, absolutely. I think for me, on the volatility side, there is, we do, on the volatility side, we do have a problem of the frame of reference. So how are you measuring volatility, and also what denomination are you using? So traditionally, and everywhere, the whole world is using USD denomination, right? So you're looking at Bitcoin price in US dollars, and then you're looking at gold price in US dollars, and then you're looking at stocks prices in US dollars, and then you're looking at S&P 500 performance in US dollars. And then, so basically you assume that US dollar is your unit of account. For you, it's like 1 meter equals 1 meter, 1 kilometer equals 1 kilometer, $1 equals $1, 1K, 100K equals 100K. The Bitcoin realization is that that's not true. Because 1 meter today, tomorrow, maybe 0.8 meters. Whereas we will still call it 1 meter. And that's the problem with measuring and